Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the Australian dollar stabbed at the 60 cent area before plummeting back towards the low area of 65.2025 and ended the session in New York flat. Data out of the US showed that the inflation report was slightly lower, according to the US Department. The November Consumer Price Index data, a closely watched measure of inflation, slowed by 3.1% than a year earlier, which was slightly less than October's 3.2%. However, it was in line with forecasts. On month basis, though, consumer price ticked up by 0.1% as forecasted. The core annual reading remained steady at 4%. The markets will now get another look at inflation in the form of the Producer Price Index, or the PPI, before all eyes turn to the US Federal Reserve's final 2023 policy meeting on Wednesday. The Fed's last statement on interest rates for this year is not expected to change anything from the CPI data, which widely expects to keep on hold at around 5.25% to 5.5% range. After the Fed's announcement, traders will closely eye the US Fed Chairman Jerome Powell when he attends his news conference 30 minutes after the announcement to look for clues on how the rate path will continue. According to news sources, traders are betting on around 40 to 45% chance of a rate cut next year in March. So looking at the technicals, I still feel from the RSI and also given two dojis of indecisiveness that the market may rebound again from that 65-20-45 area and look back towards the top side with a call to the broader state of 66 to 67 cents. So following all the information from the last 24 hours, the dollar index, which measures the greenback strength against a basket of 6 major currencies, slipped slightly from 104 to 103.75 and still respects the euro, that is, on the uptrend. Given the fact that the RSI has improved further, I'm still holding the call towards 108 to 109 and maybe even extending onto 110, where we recently saw a challenge and failed to continue. Any pullback, as I mentioned, support seen around 107.20-25. Dollar yen, two bullish days, ended the third on Tuesday to a slightly weaker pace after retreating from that downtrend and now looks towards the bottom side of the range, somewhere around the region of 144.60. I feel the market may actually slide further and remains on track to eventually re-challenge the bottom side of this range around 141.5. As I view the top side, it is anticipated that the resistance should hold in around 145.65 to 85. Sterling slightly firmer and also posted an engulfing candle to the bull case. And keeping an eye on these technicals, not quite confirmed, but I feel the market has potential to gain further and therefore looking beyond 125.80 to 126.40 and heading to 127.1570 area. Gold was also weaker overnight after stabbing the lows around 1,980 and with the market still remaining somewhat negative, may continue after recently getting the confirmation from this engulfing candle from the break of 2007. This gives me a trajectory of 1,968 to 69 and maybe extending if we see a break there. First of all, let's see how the market plays towards that area. Any rebound should find a cap from a broader sense of 1,996 to 98. Oil plummeted further and close to 3% overnight, and now the market looks towards the bottom side of the range, seen roughly around either 68.20 or 67.10.15, a key area which was where the base was found earlier in May this year. Nevertheless, the market may stage a bounce from this region and look back towards the cap that is seen at 72.60.65. Well, that's a wrap. Thank you for joining me. And as always, look out the intraday report and I hope you enjoy the rest of the day.